Today is Tuesday, October 7th. Let's review what happened today. So, I've been bearish, basically looking for this drop lower here on ES, which is essentially right into the midpoint of previous week's range. And today we created a two-stage SMT, taking out previous week high finally on ES. NQ already had yesterday, taking out previous week high. So today we put in a two-stage SSMT with YM failing to take out previous week high, right? So we ended up putting in a lower high here yesterday, and then followed through with another lower high here on YM. What is this candle here I've highlighted? It's a precision candle, right? So taking a look here on NQ, you can see that on Monday at 2 p.m. we created this up close candle on NQ. Okay, I think I highlighted the wrong candle. So we actually had two precision candles here at 8 a.m. Oh, okay, yeah. Okay, so this is where my short idea formed on NQ yesterday, right? Off of this 8 a.m. precision candle, and that same 8 a.m. precision candle on YM was right here. We also put in a 2 p.m. precision candle right here. I did not use this. However, if you take a look at YM, look at exactly how we used it today. We trade up into it, tap it. We don't even trade through it. Look at this. Perfect respect, right? Respecting it perfectly. And then dump, right? And that's where everything dumped. So kind of interesting. Finally, ES takes previous week high, which is exactly what I was looking for. And then a dump back down towards the lows. We actually ended up taking previous day low. I'm going to delete this. But we took previous day's low here, right? And what's interesting is I outlined everything this morning. I just didn't take any trades because I thought today was going to be ranging. But basically, I had annotated all of this. So we had a daily cycle SSMT at the lows here, and then we had put in this SSMT here between 8 and or 6 and 7 o'clock here this morning on the hourly chart. And this dark box here is a precision candle from the 4-hour chart. So this 4-hour candle right here is a precision candle on the higher time frame here on the 4-hour, right? And why is this is a key candle? Because we not only is it a precision candle, but we also created that SSMT, right, on the daily cycle right there. So YM took the low, NQ failed to, ES took the low, NQ failed to. So that's why we have this candle highlighted. So what's the significance of that? So like you see how overnight we created SSMT with a precision candle, we close above these down close candles, and this order block supports price, right? Inside of this order block we create another SMT, continuation SMT, right? And then we push up from there. And look at this on YM here. So things start to decouple a little bit because look at how we trade on this 6 a.m. candle, right? We have this precision candle, takes the low here on NQ, but look at how YM is trading. That same 6 a.m. candle pushes to the upside with extreme expansion, right? An extreme displacement, energetic move to the upside. And this is pre-market, right? So like it's kind of an odd time for volatility. But anyways, if we take a look at the higher time frame, you can see we have this gap here, some failure swings right there. We ended up closing the gap on the 4 hours. So, you know, you don't need quarterly theory concepts to trade ICT or whatever, right? But to me, there's specific candles to look out for, and that's how I already had this annotated, highlighted this morning, and I have the screenshots to prove it. I was on my phone this morning, annotated, took the screenshots, and then went back to sleep. I did not trade today. The reason being why I didn't trade today was because what I was anticipating was for ES to finally take previous week high with these equal highs, right? And then for us to find a trade off of that. However, I was just really tired, and I actually didn't anticipate us to have such a clean short today. Um, and there was a potential that we could have just continued higher today as well. But my anticipation is still looking at previous week's midpoint here on ES and NQ. Ideally, that's what my target is. My downside target is going to be, at least for the near term. And then we could potentially look at this weekly fair value gap depending on how we close out this week. It's probably going to be something we look for going into next week, possibly down back into this weekly fair value gap, and then from there we can look for longs. But anyways, so I did not take any trades today, but going ahead and looking at how we traded, we can go ahead and see how we could have taken an entry today. So it's actually pretty simple. Nothing crazy today. It was just very clean, in my opinion. I'm actually regretful that I sat out today, but it happens. I wasn't feeling 100% this morning. I hadn't been sleeping well the past few days, and so I kind of let myself just rest today, and that's fine. I took today off, but normally, I feel like the best days to be on the charts are gonna be Tuesday and Wednesday. Most times, even Monday. Sometimes you're gonna find high of the week, low of the week on Monday, Tuesday, right? And 9 times out of 10, it's gonna be Monday, Tuesday, or Wednesday, right? Very rarely do you find high or low of the week put in on a Thursday or Friday unless it's capping out the range, right? So, yeah, we have a pretty clean setup here. Not gonna lie. Why? So as ES takes previous week's high, what is YM doing? It trades into this precision candle, which I already have highlighted. Most people probably wouldn't recognize this as a key level, right? But I did, using these concepts specifically, right? And so what I'll do is, like, throughout the week, I'll highlight specific candles that I believe to be key candles throughout the day. And even this precision candle here, this higher time frame one, even that can be utilized throughout the week, right? So depending on how they can be used so many different ways. Precision candles are like how you can gauge the market and how you can gauge intermarket analysis, right? So that's how I get a good feel on which market is the strongest, which market is the weakest, what am I expecting, how do I use it? I use it as a breaker or order block, or do I use it as a swing point, right? So those are the ways that I use it. You can use it as a order block slash breaker, or you can use it as a swing point to trade with, right? And so it just depends on context, how it forms and when it forms in order to use it in which way. In this scenario here, for example, right, yesterday we have this precision swing point. This is how you use it. You use it as a swing point. We also had this precision swing point. We would use that as a swing point, right? So how do you use it as a swing point is you would take, and let me just mark that up. So how I would use it as a swing point is, this is the hourly chart, right? You're not going to execute on the hourly if you're an intraday trader, right? So in order to use it as a swing point is you're anticipating candle number 3 of the swing point, which is always going to be, candle number 3 is always going to be the candle right after the precision candle, right? Precision candle is always candle number 2. Candle number 2 is always your manipulation candle, right? So if you think about the formations of a swing point, and if you think about AMD, or if you think about, all of these things, candle 1 is always accumulation. Candle number 2 is always manipulation. Candle number 3 is always distribution. If you think about it in this way, and you think about the function of a candle, right, then you can understand that the function of candle number 2 in this scenario, creating a precision candle, it's creating the manipulation. Why? Because it's decoupled, right? You can see that this candle closes as an up close, this candle closes as a down close, but furthermore, right, it becomes a swing point that you can anticipate to be much more accurate than just like any ordinary swing point, right? Like this candle right here. This isn't like This is not a tradable, it's not necessarily a tradable swing point in my opinion. Because the precision candle is formed with SSMT here on ES and NQ, right? That there became a high probability precision swing point trade. Coupling it with SSMT, right? Now you have two cracks and correlations with the SSMT, and you have the precision candle itself, right? Now you have timing confirmed. How is it confirming timing? Because look at the time. This forms at 8 o'clock, and your anticipation is that candle number 3 should be your distribution candle. And what is candle number 3? 9 a.m. That's a key time, no? Right? And so which asset do you think would become the better short? Technically, they both were great shorts, but you can see which asset was weakest. You already know this when 9 a.m. opens because of how the 8 a.m. candle closes. So this is how you can use a precision candle to decide which market to trade and to actually understand the function of the candle and where you are within context of the swing point. You now know that candle number 3 is forming. Okay, so how do you get in line with candle number 3 to actually enter a trade, right? I know that's the question everyone would want to know the answer to. So this is where you can use concepts like I don't know. Well, there's a lot of information out there, right? But if you're anticipating candle number 3 to form a lower high, right? Your goal is to then anticipate where within candle number 2's range, where would the high of candle number 3 form, right? So your job is to anticipate the high of this candle, the open, high, low, close of this candle, right? So what I do is I just divide the previous candle, candle number 2, into two parts, right? You have the upper half and the lower half, right? Upper half, lower half. So what you want to do is you take now you've taken the range and divided it into two. Now you just go in the lower time frames and look for a key level at or near 50% of this previous candle's range. And you can clearly see we have a 15-minute fair value gap. Now it's not always this textbook this clean, but that's exactly how I was able to get in line with the short yesterday, right? So these concepts are always printing every single day, and they're not always used the same way. In this scenario, like I was pointing out, we do get a clean swing point formation, right? And within this fair value gap, we do get an SMT between, a second stage SMT. So this is a three cracks and correlations. You have your SSMT on the higher time frame with previous day's high. You have your precision candle on the hourly time frame, right? That confirms at 9 o'clock when the 8 a.m. candle closes. And then now you have a third crack and correlation between the 15-minute time frame with the sequential candle, right, printing that SMT. And again, there's no strength switch here. There's no strength switch, meaning ES maintains weakness, right? ES doesn't take out this previous candle's high like NQ does, and then NQ doesn't create a lower high, right? Instead, NQ maintains strength, takes a previous candle high, and ES maintains weakness, fails to take previous candle high. And this happens to be right at 9:30. That's how I was able to enter the trade right at market open and capitalize on this short. And we had an obvious area to target, in my opinion, on both ES and NQ. Obviously, we have these equal lows right there and hourly fair value gap as well. And on top of that, your target on ES to me was also very obvious. We have this new week opening gap right here. Okay, so everything in terms of how the market moves is all about intermarket analysis. Everything in terms of how the market places, how the market creates reversals, right? There's never a valid reversal without SMT cracks and correlations, right? So learning these concepts from quarterly theory is going to separate you from just trading like ES or just trading NQ, right? Or just trading one asset, and rather it forces you to combine um, what you see from the triad, which is ES, NQ, YM, right? It forces you to combine what you see from all three markets in order to create a strong narrative, and that's why these concepts work so well. All right. So similarly here on ES, we trade up into the EQ of that candle number two's range, into the SIBI, and then what do you do from there? Now you just jump into your execution time frame on this. On this setup, this would have been a 1 minute setup. So all you really look for is some form of displacement. One of my favorite ways to trade this is you literally just wait for a candle to close below previous candle's low, really, on your execution time frame. That's like the easiest way to frame a setup, right? As soon as you get a closure below one of these lows here, boom, you just take the short right there. You don't have to overcomplicate it, and your target is the weekly open, right? That new week opening gap. 3-hour trade here on ES, 17 points cleared, and you could take, if you're risking, you know, $400 or $500, let's say $500 is your max risk, you could take 2 minis on this shit with a 5-point stop. You know, this is beyond perfect. This is textbook clean setup right here. This is exactly what you want to see every single time when a setup forms. And the more and more you see these setups form, the more and more you understand how to use these concepts, intermarket analysis, the right way, the more confidence you're going to get. Confidence is achieved through repetition, no matter what you're doing, right? If you are in a different discipline than trading, let's say you're doing martial arts, let's say you're doing sports, let's say you're doing training like lifting, no matter what discipline you're in, confidence comes from repetition. And the more you see these, the more you spot these, the more you visualize them, the more you journal them, the better you are at actually seeing them form and actually seeing it play out, right? And then the more pain you get from you know, no system, no strategy, no guru or you know, or teacher or whatever you want to say, none of them are ever going to make you profitable, ever. It's only you that can make you profitable. And profitability and consistency comes from pain. Managing your trade, managing your emotions, losing a trade, missing a trade, right? Missing an opportunity, losing a trade due to poor trade management, not taking profit and then getting hit at break even. All of these painful things that happen day to day to traders is why they aren't profitable. But the more they happen to you, and the better you learn from them, is how you become consistent and it's how you become profitable. Like when this forms, you could literally just enter right inside the 15-minute gap. You don't need to zoom in. This could have been your entry right there, and your stop could have been at high of day, right? You would have had a little bit larger of a stop loss, but right, maybe right there. But the idea, right, the validation, right, where's your invalidation is when this high gets taken, right? That's essentially what you're saying to yourself. And look at this, we have a 15-minute change in state already. So this pullback is just an OTE essentially of this leg, right? So what is the optimal area to get short in? You could literally enter right there. You could literally also enter right here off this no wick 15-minute candle. What's also interesting is NQ also creates a no wick 15-minute candle right here. So literally your short could have been off that no wick candle right there, stop at the high, and then your TP right here. The only reason I didn't enter it like this is because I don't like trading with heavy size at 9:30, right at 9:30. Like I personally, that in my experience, 9:30 could provide another form of SMT. You know, you never know if NQ might want to like take out 8 a.m. high, and then go, while ES fails to take out 8 a.m. high. You see how Or you never know if ES does a strength switch and becomes a stronger pair and we end up taking 8 a.m. high, right? And so all of these things you have to consider when you're putting risk on, right? So like, just because we have a precision candle, just because like blah blah blah, all these things, it doesn't mean that there's going to be a lower high that forms. A lot of times the precision candle itself is not the high of the swing point. A lot of times, right? And you only learn this through experience. So like, it's not something that I could teach you. It's only learned from like, let me see if I can find an example of a precision candle where here, this is a very good example right here. This is a really good example actually. So on the 4 hour, we have this precision candle form right here, right? And we create SMT between candle number 2 and candle number 3. Oh, my mistake. Candle number 1 and candle number 3. But that's because it's a 6 hour, right? But anyways, let's just look at it in terms of a 4 hour, because you don't get the precision candle on the 6 hour. You only see it on the 4 hour. So you see it also on the 3 hour, which I actually love the 3 hour chart. I think the 3 hour chart's really, really clean. So I use the 3 hour and the 6 hour a lot. But the 4 hour also is very important as well. So like, you just have to get used to seeing these things form. The higher the time frame, the more precedence it takes. So the 4 hour takes precedence over the 3 hour. Okay, so I'm gonna use the 4 hour in this case, and you don't see the precision candle in the 6 hour, so I'm not using the 6 hour. Okay, so you see here we have a precision candle form at 2200, closing at 2 a.m. So that confirms your precision candle. And notice how NQ does not take low of day, right? While YM has already taken low of day here and low of day here, right? Candle number 3, right? Because your precision candle is always candle number 2, okay? Candle number 3 takes out the low, right? So your precision candle is not the low of the swing point, right? But if you understand, like, this is where you combine traditional swing points with precision swing points, right? So technically this is your precision swing point right here, not this one, right? This is your precision swing point right here. Candle number 2, 1, 3, right? But which one is the tradable candle? Well, technically you could trade candle number 3, but the tradable candle, the better candle to actually have longed in this scenario would have been candle number 4, the 6 a.m. candle. Interesting, right? So why? Because if you look at the way that the swing point forms here, look at this traditional swing point versus your precision swing point, right? Candle number 2 would have been this in your traditional swing point, right? Candle 2 closure above previous candle's low, right? And then candle number 3 expands. Boom. You see that? So in this scenario, let's say you wanted to enter. Let's just look at it in terms of, okay, how would we have found an entry? Always, in my opinion, always use a change in the state to confirm. After you confirm your SMT, or after you've gotten your SMT, then you want to validate it with some form of lower time frame price action. So that's where you start to look for your entry patterns and shit like that. Everything else becomes everything else, all the hard work is done on the higher time frame, and then you look for your entry patterns on the lower time frame after the hard work is done. So in this scenario, right, we create a higher low on NQ, a lower low on YM. Where does the change in state occur? After the SMT, right? So where does the change in state occur here? Well, technically on the 15-minute, your change in state occurs here on this closure. So your entry is valid right here. Stop loss at the change in, at the SMT low, and then you could target, I don't know, your weekly open or 2R, whatever you want to do, right? That's probably what I would have done, just target your weekly open here. Or what I would have done is this could have also been an entry right here because we formed a down close candle within this range, and then this next candle closes basically back through it. So this becomes basically like a, I don't know, it's more advanced, I guess I would say, because if you're pattern trading, technically, if you're pattern trading a change in state, this is your entry, right? And then maybe your stop goes there. And this is very valid too. This is a very clean setup right here. Look at that, more than a 3R, 177 point trade here, right? Or maybe you target this old high right there, right? Just shy of it, but you understand we're just leaving equal highs, consolidating, probably gonna target it, right? Boom, take it out right there. Anyways, right, your pattern trade entry would have been here on NQ. This is your technical change in the state after your SSMT. You get the change in state here, right? Actually, I really like how NQ traded here. And a lot of times too is we'll get another lower time frame SMT. In this case we do, right? So we have another SMT right there. So technically this would have been that candle, and then you would have had, right, another purge right there. So this would have been a second stage, right, SMT. Now this is your daily cycle, right, with the previous 6-hour range. And then change in state on the 15-minute. You could have entered here, you could have entered there, whatever. Right, boom. Or I don't know, you could even go on the 10-minute or the 5-minute, right? It just depends on what looks cleanest to you. In my opinion, actually the 5-minute looks really clean here. Entry right here, stop at the low. This would have been the cleanest, the lowest risk entry, right? Why is it the lowest risk? Lowest risk means the entry is closest to where your invalidation is, and this is where our invalidation is. And also what's interesting is this this opens up the new 90-minute cycle right at 4:30, right? So we end up creating another 90-minute cycle SSMT. So this is where, like, boom, you see that? So we have a daily cycle right there, and then a 90-minute cycle right there. And so that's essentially what it would look like. And then the 5-minute aligns with the 90-minute. So initially it's you want to be entering at the 15-minute change in state, right? Because you have a daily cycle. So the 15-minute aligns with the 6-hour, which is your daily cycle. But then you have a second stage with your 90 minutes. So then you can actually zoom into the 5, and then this would have been your valid entry, your true change in state. You could have even entered off of this, to be honest, because your true CSD would have been just right there. But that's a little more advanced in my opinion, and it takes a lot more repetition in order to be confident in something like this, because this is very early, right? But obviously we're not going to be trading like London session like this, but this is just a good example of when a precision swing point forms. And it's not necessarily that candle number 2 is always going to be the low of the swing point, right? Sometimes candle number 3 is going to give you a second stage SMT, which is exactly what happens in this scenario. On the lower time frames, it gives you another stage of SMT, right? So that's one thing that, you know, makes it a little bit harder, or more, you need more of an advanced understanding, right, of intermarket analysis, or just practicing studying these concepts in order to become confident in trading it, right? But yeah, anyways, we also created this precision candle right here, right? And how do you use this, right? How do you use this precision candle? So in this scenario, it's actually very interesting. So we don't actually retest it here, but let's see on ES. Okay, ES does retest it. Look at this. Right? So this is how you use it, bro. This is exactly how you use this concept. So let's say you're looking for longs and you're up in pre-market, and then you get something clean, right? Well, in this scenario, look at how we retest the precision candle on ES but fail to do so here on NQ, right? You could have entered your trade as on NQ, you could have traded NQ as ES taps into the precision candle, or you could enter your trade on ES as it taps into the precision candle, right? And this is on the hourly, so let's take a look at the 5. So boom, right? Precision candle here. Do we have a PD array? Yes, we do. Boom. Right? And then we also have a 5-minute change in state here. So at this point, your entry could have been right there, stop at this low, or if you want to be a little safer, stop below this fair value gap, and then you're targeting previous week high, right? Or maybe you say, I want a 2-hour trade minimum. Okay, there you go. There's the setup here on ES. And this precision candle also formed an SMT, right? So you were pretty confident that this is a protected low, and if you wanted to, you could have even entered on the actual SMT change in state. So like here, right? Where do we have a change in state? We have a change in state right there, right? So on the hourly, the continuation, right? The continuation play is, okay, we have an SMT. Okay, we have an SMT. Okay, let's confirm. How do we enter this trade? Right, this would be this is a good example of a continuation precision candle, right? So this is a continuation based on what's happening in context of what occurred down here. This is your true reversal. This is your change in state on the hourly, right? So at this point, you're just looking for continuation, and we actually put in precision candle here. Your entry could have been either on this candle, right? Candle number 3 of the continuation here of the precision candle, or the retest of the precision candle itself, which you get right here, right? So this would have technically been, notice how like this is a traditional 3 candle swing point. Candle number 2 purges the precision candle low, right? And then closes above. So this is another change in state here. This is another order block. And then we retest that order block. So you see how the precision candle can be used as an order block. So that's just one of the many ways you could use. You could even enter off of this fair value gap, stop below, right? Stop below the SMT, right? This technically would have been the best, obviously, entry on ES before this confirmation, right? Targeting the previous week high, and that's a clean 10-point move there. So this is all in the pre-market too. So yeah, anyways, so now finally, then what happens after ES takes previous week high? Well, we end up printing a minor SMT right here. But what's more important, right, than the minor SMT is the fact that we had a higher time frame SMT with YM. So YM never took previous week high, right? And so how do we trade this? We just literally, the higher time frame SMT takes precedence over everything, and that's your first stage SMT, first stage Kraken correlation. And then the lower, like any lower time frame Kraken correlation like this, minor Kraken correlation is considered valid, right? Like it's not tradable on its own, in my opinion, like this minor SMT on its own, right? But because in context with the higher time frames, we do have SMT with previous week high with YM, it becomes a valid form of a minor Kraken correlation that you can use to trade. And on top of that, it's formed inside of a PD array. So here, obviously, you have your 5-minute gap, right? And then on ES, right? Let's say you traded ES, you could have waited for this change in state. On the 5, this is your 930 candle. Here's that same 930 candle. You could have waited for this change in state right there. Short down here, stop above your SMT, right? and then your target low of day, right? Or even previous day low here. And I actually like this target here because it's a 6-hour fair value gap. Right, to me that's a clean drawn liquidity. We also have these equal lows down here, which is your session high lows, right? So this would have been a clean target to aim for right there, and that's over 100 points, right? Over 100 points, risking 45. To me, as long as it's under, ideally under 50 point stop, I'll take this any day of the week. I'll take this any day of the week, or even add maybe a small starter right on this, and then add on the retest of this, right? And then if you added here, I would honestly just put my stop here just in case it wants to go for another like minor SMT here and take out this high. But this fair value gap technically is your line in the sand, right? Your idea is wrong when the high of day gets taken. But yeah, this is just some ways you can use quarterly theory concepts, namely advanced, using the precision candles in an advanced way for intermarket analysis and finding entries, right? Another thing is we have this 4-hour. I never really go over this, but this 4-hour higher time frame precision candle, right? Let's say you were looking for longs overnight or pre-market or whatever, right? Look at what happens. So we end up creating this candle 2 closure, right, at 2 a.m. So this technically, in your mind, this is basically London low of day, right? That in your mind, right? Because we have your daily cycle, blah 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 blah. So what are you doing? You at 6 a.m. we open. You're expecting what? A 6 a.m. open low high close, right? So you're expecting a swing point, a traditional swing point here, right? And you're anticipating these lows to hold because of the daily cycle SSMT, right? So in this scenario, you could have longed on the retest of the precision candle here, and then all you would have to do is within this 6 a.m. 4-hour candle, you just look for an entry. So, right, so 6 a.m. opens right here. You're just waiting for some kind of entry, right? So in this scenario, boom, 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 we have your, I guess, like one of my favorite entry methods. Like I said, after all the hard work is done on the higher time frame and you're just looking for a way to enter, just a simple closure above a previous candle high would, for me, be considered a valid entry. And look at this, close above this candle's high, entry. Close above any candle high, this one. So this one would have been your entry here. Your stop probably would have had to go at least here. But look, that's only 6 points, right? And then you can aim for, I guess technically your 2R would not be hit here if you took that entry, but you should be looking at previous week high, right? And this is just a safe stop. Your stop technically could have gone below midpoint of the precision candle here, and that's a little bit more advanced. Or you can anticipate a breakaway gap, right? Because of this consolidation, breakaway gap, blah 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 blah, right? So you can put your stop technically at the gap low or a little bit below midpoint of the precision candle, something like that. Any of that would have been valid, and then just aim for your 2R, right? So that would have hit. So it's just like all of these things just come with experience, right? You're not going to be able to know for sure how these things work. It's not going to be cut and dry, the same exact black and white, like the same exact way every single time, right? It's up to your discretion and up to your experience and how you approach the markets. Like, how would you put your stop in this scenario, right? Well, you would have to probably put it right here because of this fair value gap, just in case it drives one more time lower and takes out these equal lows. But this little minor SMT here confirms it would have to be a 5-minute confirmation. So I would probably go down to the 5-minute and wait for, okay, we get the change in state here. Okay, so now I'm pretty confident I could probably move my stop up a bit, or maybe you just want to wait for displacement away, right? So once we get this closure, pretty much moving your stop here is guaranteed, because now you have pretty much confirmed that this SMT should hold, right? Because now you have the change in state after the SMT, right? And displacement away, out of this range, right? Out of this range, out of this consolidation. So boom, right? There's your setup for the long right there. But yeah, for the short, it would have been real easy. I mean, this is another market open, right? This is another trade that occurred right at market open. But rule of thumb is that if you understand, right, I already knew market was going to reach for previous week high here on ES, right? And it's all about the timing, right? So like a lot of times, rule of thumb for days like this is like when you're looking for a valid manipulation to occur in order to enter the market right at open, right? A lot of times what happens is 9:30 is going to take, or right before 9:30, it's going to take a higher time frame objective, a key objective, right? And in this scenario, we end up taking previous week high, right? Prior to 9:30, right? A lot of times what 9:30 would then do is create the reversal, and then 10 will expand, right? So that's exactly what happened on this day. So rule of thumb, every single time you see us take a higher time frame objective at 8 or 9, whatever, you can anticipate a reversal to occur. And this just forms a traditional swing point right here, right? And so you can expect that 10 a.m., like let's say you weren't confident right at open to enter, you can expect that after this 9 a.m. candle closes, that 10 a.m. will be your expansion lower, right? Because you can anticipate a 3 candle swing point, right? An H1 swing point forming. And remember, this is off of the SMT on the higher time frame with YM. So this is valid to trade. You already have your cracking correlation there, right? And so your second stage crack would have been on the lower time frame. And also remember that rule of thumb in terms of trading number 3, right? Candle number 3, you want to take your range from candle number 2, and you're looking for a key level at or near the midpoint. It's not going to always trade into the midpoint like here, right? Because ES is much weaker, right, than NQ. But in this scenario, do you see a 15-minute key level? No, you don't. Actually, what ends up happening is this is a lot of concepts in one video, so it can be really confusing. But this ends up trading into this 15-minute gap here, pushes up but fails to make a new high, right? And so what happens is you can trade the opposite OTE. So this would have been an OTE to the downside here, right? Same thing on ES. We trade into this 15-minute gap here, tries to make a new high, fails to, right? And that 5-minute gap here holds, but this is more advanced, I feel like. It's a little bit much, but yeah, anyways, you can see that we trade into the 5-minute fair value gap on NQ. That's in at or near the 50% of that H1 candle, previous H1 candle, right? Your candle number 2, right? So in this scenario, we end up trading into premium on NQ. And why does ES not, right? ES is the weaker pair, and we create the CSD already prior to 10 o'clock, right? So that's why when 10 opens down here, we just pretty much go, or have a minor consolidation, then go, right? A lot of times what happens is if it doesn't expand right at 10 o'clock, usually that's going to be a 10 a.m. news event that expands the market right at 10. But because today had no news, what the market will usually end up doing is at least wait 15 to 30 minutes after 10 a.m., creating consolidation, confusing markets, basically confusing traders, and then it'll go. And that's exactly what happens, why we get this time distortion right here. Look at when we actually go on NQ. 10:30, boom. This happens all the fucking time, dude. All the fucking time. And the more and more and more and more experience you get, the more confidence you're gonna be able to have, and the more like this shit, you'll see this shit happening again and again and again and again. But yeah, 5-minute gap here, at or near 50% of the range of candle number 2. Okay, 10 a.m. opens. Okay, we're not even close to it, but what happened on ES? We already created the change in state, right? And sometimes if you want to wait for even more confirmations, what you can do is look for two changes in states. So you see how you get one here prior to 10, and then you get another one here. What is it doing? It's creating, right? It's creating an order block here, another order block here, right? So a lot of times right before the real move, you'll get like 2 or 3, depending on how fast the market wants to go. Sometimes it doesn't even give it to you 2 times, but yeah, in this scenario, it does give you 2 changes in states before we go. Actually, even 3. So you could have even entered right here if you wanted to. So this could have been your short, and stop would have had to go here. And then target would have been low of day, or let's say, you know, back to the new week opening gap, previous day low, whatever you want it, right? So another 3-hour trade here on ES. Here on NQ, where does 10 a.m. open? Right here. Notice how 10 a.m. opens, and then the next 5-minute candle trades back up into 5-minute gap here. This is your entry, right? This is your key level on the lower time frame of the swing point, right? Remember, this is all in reference to the hourly swing point that we're trading away from, right? So everything that I do is centered around trading away from a swing point, whether it be an hourly, 30-minute, or a 4-hour or 6-hour or whatever, 3-hour, whatever, right? 90-minute, right? So everything I do is in anticipation of trading away from a swing point. So you see, we create a swing point here on the 90-minute, 10:30 open highs, and then goes, right? It's exactly how you want to be trading every single time, every single day. And the more and more and the more you practice this, the better you're going to get, the more confidence you're going to have. And again, 30-minute swing point. Okay, we get a 30-minute change in state, and closing through this fair value gap here, right? So now we have an inversion on the 30-minute. This candle, boom, trade enter. 10:30, right at 10:30, key time. Your stop can go above the previous 30-minute candle maybe, right? And this happens to be a 15-minute change in state as well. So look at that. So everything starts to align right at 10:30. Everything aligns here. You get your 15-minute change in state. You have your minor SMT, which is your second stage, right? We're closing below a higher time frame, not a higher time frame, but a 15-minute order block, right? And we're getting an inversion on the 30-minute, and the new 90-minute candle opens, right? Technically, the way I like to trade is I really like to capture the expansion of one 90-minute candle, one hourly candle. That's like the most ideal for me. One 4-hour candle, one 6-hour candle, whatever, right? Just depends, but this is like textbook in my opinion. So yeah, we trade all the way to previous day low, and ultimately back into the new week opening gap finally here on NQ. So now we could technically go higher off this. So, you know, depending on what happens tomorrow, we do have 2 p.m. FOMC meeting minutes. So chances are I should have traded today and just sit out tomorrow. Honestly, that probably would have been the best for this week, but I thought that today was gonna be shitty and I sat out today, but today was mad clean in my opinion. But yeah, that's like in a nutshell how I trade away from swing points using precision candles, how to anticipate, you know, expansions using these quarterly theory concepts, whether it be SMT, precision candles, and different ways that you can use precision candles on the higher time frame, on the lower time frame, blah 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 blah. The long, like I said, remember the long here, 4-hour swing point here, precision candle here, retesting of it, and then you just look for a confirmation entry, right? Your 5-minute CSD, boom, entry, stop at the low here, targeting previous day high, and that's exactly how you could trade on, using one way, right? You're trading away from a 4-hour swing point, right? And this scenario, you're trading away from a hourly or 90-minute or even 30-minute swing point, right? So yeah, man, it doesn't get better than this. Like, this is like top tier trading, in my opinion. Look at this. You get your 5-minute change in state, and then a second change in state here, and then a third one here, right? And notice how each change in state, the closures of the change in state is further away from the order block. Like, look at this one. So this is how you know the strength is coming into the market here, meaning smart money is accumulating shorts, and then it confirms more and more and more as it gets deeper, right? It becomes more and more obvious. But yeah, here technically this would have been like the most, like, there's your obvious order block right there, and then boom, as soon as we close below here, it's pretty much go time, right? It's pretty much over, and that occurs right at 10:35 to 10:40. So as we head into that 11 a.m. macro, 11 o'clock, boom, right? Let's look at that 11 a.m. candle. Massive, 150 points, 160 points in one body, right? In the body, right? Candle 1, 2, 3, and then 4. And notice how the bodies are getting bigger and bigger. Boom. I mean, this is pretty much in a nutshell how I trade every single day, using SMT to confirm my ideas, and then on the lower time frame, just looking for changes in states or whatever to confirm the idea. But yeah, boom, that's it.